Priscilla Barrera with the Investing News Network, and here with me today is Andy Schectman, President of Miles Franklin. Thank you so much for joining us today.
Awesome, Priscilla. Thanks for having me. Appreciate it.
So my first question is about Trump. We know that Trump's instability has been one of the factors impacting gold prices in the first half of the year. How do you expect Trump to impact gold for the rest of 2017?
Well, with Trump comes a whole lot of instability and uncertainty, that's for certain. The market really appears to be setting up, Priscilla, for what looks like a major uptake in gold. The positioning on the COMEX market is incredibly bullish. In fact, more bullish than I can ever remember seeing. The amount of short contracts that the commercial banks have been paring down is unprecedented. In fact, they're at their lowest levels of short position right now that we've seen since gold and silver have bottomed. And when we look at the managed money is paring down their long contracts. What I'm really trying to say here is that the managed money typically is never on the right side of the trade, and the commercial banks are almost always on the right side of the trade. Right now, they are gearing up for what looks like a very, very robust uptick in the metals in second half of 2017.
Right. And gold prices are also very sensitive to interest rate hikes. The Fed increased rates twice so far this year. Do you expect them to increase rates again later in 2017? And what should investors consider when factoring in the gold price?
Well, I don't think interest rates have a snowball's chance in Guatemala of going higher. I think they raised interest rates rather nominally just to save face. Every 1% uptick in interest rates is a $200 billion increase in interest payments via the Fed. They can't let interest rates rise substantially. In 1980, when interest rates rose and killed the gold bull run, Paul Volcker raised interest rates above 17%. Can you imagine what 17% interest rates would look like on top of a $20 trillion debt and $150 trillion in unfunded liabilities? So I guess my answer to that is that I really don't believe that interest rates really have any chance of rising substantially. And a small uptick in interest rates has generally proven to be very good for gold. So for me, I look at it as a non-event, I really do.
And aside from Trump and the Fed, what other factors should investors be watching that could impact the gold market this year?
Oh boy, there's a lot of, money creation, debt, geopolitical events, North Korea, Middle East. Look, a trillion seconds ago was 31,688 years ago. We have a $20 trillion debt and $150 trillion in unfunded liabilities in a country who's lost its manufacturing base, whose tax structure is stifling, and we don't produce much of anything anymore. The rest of the world makes things. The United States runs financial services. That is not a springboard from which recoveries are made. I would simply say that you buy gold and silver less as an investment and more as wealth. It's been wealth for 6,000 years in times of uncertainty. It should be part of everyone's portfolio, even in good times. So, I think the bottom line is that you buy gold and silver and you hope you never need to use it. And if you do, you're damn glad you have it. If not, you pass it on to your children. Look, I would also be disingenuous if I didn't say I wasn't expecting higher prices and am appreciative of higher prices. I am. But to me, really, I own it as money. I've been accumulating it every 2 weeks for 28 years since I started Miles Franklin. That was just my way of becoming my own central bank, saving my own money, my own wealth. And I err on the side of 6,000 years worth of history rather than, the Federal Reserve, which has been around since 1913, who's supposed to, protect our money supply and make sure that things don't get out of control with inflation and unemployment and what have you. Well, they're not doing a good job, so I'd rather take it upon myself.
All right. And is there any precious metal you're bearish on this year?
Am I bearish on any precious metals this year? Well, it's interesting. I think platinum really should be, based upon all metrics, really should be number one acquisition right now. The prices are so low, it's unbelievable. But I believe that diesel fuel has been outlawed in Europe, if I'm not mistaken. I'm fairly certain on that, which is really putting a crimp on the catalytic converter side of things. Palladium, which has done very well, is used in catalytics in gasoline engines, and platinum is used in catalytics in diesel engines. Albeit I expect it to come back, it may not be as soon as people think. And even though the numbers are screaming to buy it, and it's many, many times more rare than gold, and it should be a good buy, I'm not as excited to buy platinum right now as I am silver and gold.
Right. And what advice would you give to investors looking to jump into the precious metal sector? Can big gains still be made?
Yes, big gains absolutely can still be made. I would think the number one thing to keep in mind in buying physical precious metals in the United States anyway is to realize it's a federally non-regulated industry. And there's a lot of companies out there that are less than genuine. One of the things that makes Miles Franklin different than everyone else is that we are in the state of Minnesota. The state of Minnesota is the only state in the entire United States to have regulated the precious metals industry. As such, we are beholden to the Commissioner of Commerce with an enormously large surety bond, background checks annually of every employee and principal in our company, and by the way, if anyone has a felony related to financial services ever, they're blackballed from the industry, and compliance issues and continuing education that no one else in America has to abide by. As a result, nearly 100% of the precious metals companies in America have boycotted the state of Minnesota. What it really means is if you work with a company like Miles Franklin in Minnesota, you can't be taken advantage of. And in the last 3 years, this precious metals market in 14, 15, and 16 has seen a total of over $120 million stolen from the three largest online precious metals companies. 2014 it was Tulving, 2015 it was Bullion Direct, 2016 it was Northwest Territorial Mint. All three of the owners of those companies are in prison. Federally non-regulated industry. The cheapest company online is not always the best. And you can buy your Maple Leafs from anybody, but until you get ripped off, I think you'll realize that it's better to do your due diligence and make sure the company whom you're buying from has a really stable, strong, solid reputation.
And finally, can you share with our audience what companies you're following right now, or which are your favorite stocks?
You know, I do like mining shares. I don't own a tremendous number of them. Keith Neumeyer, anything that Keith Neumeyer does has been very, very good for me. First Majestic has always been at the top of my list. I'm a big fan of Peridium, which is in the Golden Triangle, I believe, in British Columbia. And I believe they just went into production. That's one I've owned for a long time. I like Seabridge a lot. And I like some royalty companies also, Royal Gold. I think that if you can buy some majors, have some exposure to some juniors, and find some exploration companies, you're doing the right thing. I think everyone should have an exposure to mining shares. It's a little bit more volatile than the physical precious metals market, but it's also a whole lot more rewarding when you're right. So, I might not be the best person to ask on that simply because I focus more on physicals, but I do think that there is room for good mining shares in every portfolio.
Thank you so much for joining us today.
Thanks for having me. I appreciate it, Priscilla.